All right, the market ended Friday and the week flat after bouts of heavy volatility. However, the Indian equities turned into foreign money magnets once again, with $7 billion coming in during July and August. We discuss all of that and more on your favorite weekend show, the Editors Roundtable. I'm Sonia Shenoy, and with me is Prashant Nair, Anuj Singhal, Mangalam Malu. Folks, I don't know about you guys, but nerves were all over the place this week. One very good day, one bad day, one okay day. I don't know what was happening, and one holiday.
Which was supposed to be the worst day, right? When the market was shut and the SGX Nifty was down 300 points. Yeah. How rarely is this possible? The Nifty ended with, I think, 5 or 6 point move for the week. The Sensex, I think, for the week was absolutely flat after the last 30-minute move. And after so much happening, it's like, one of those tiring markets once again making a bit of a comeback. And just when, both intraday and weekly wise, just when you think the market's making a move, opposite direction, takes over, and
on
really
Tuesday, the market was on steroids, right? We were discussing what's happening here.
My takeaway is that never look at SGX Nifty on holidays. Don't look at it on, there's no point, right? Saturday, Sundays, can do anything, but Monday morning or, the next day after the holiday, it could be something completely different is what you said, because there was a 300-point downtick on that holiday. And then it was nothing.
Since you mentioned SGX Nifty, this is something I always say, that you should never look at SGX Nifty. And there's this Hindi saying that I have, जिन्हें परवाह है कल की वो रोएंगे रात भर, जो जीते हैं आज में वो सोएंगे रात भर. It doesn't matter, what the SGX Nifty does in the night. You come back next morning and trade.
So, you're in quite a Shairana mood, so to say. But
if Anuj wasn't an anchor, he would have definitely been in Bollywood. The kind of, the way he tracks.
Sure,
I'll take it as a compliment.
Behind the camera,
Okay, so yeah.
We'll talk about Bollywood is not doing well this time
around. To me is over for the year already. You remember the opening episode? I think it was over that day.
What about you?
No, so I was just looking at the way the markets have moved, etc. It reminds me of a cricket match where you look at the score and you'll be like, okay, it was a tie. But it's only the people who watched that match will know the emotions through which every player, the viewers, all of them went. For the record books, yes, 5 or 6 points move for this week. Everyone will be like, okay, this is a blip. But at the lows, Nifty was 17,150 or 166 odd, and at the highs it was 17,700. So that's 600-point move for virtually nothing. So that was the emotions. Those who were involved would know exactly how the week was.
Oh, absolutely. So let's stack up the numbers, right? FIIs were money magnets as we were just referring to it. But how do the numbers look this time?
Yeah, Sonia, pictures tell story better. So let me just go across to the wall, and I think the graphics would come up for you, and just go through that, because this was the week in which there were some very interesting data points which came through. Short bets in US. Remember, we had discussed this 2 or 3 week backs as well, that what's happening over there. Now look at this. Post-COVID, this is the kind of short bets that hedge funds had on the US market. 300,000 net short contracts on the S&P 500. After that, of course, you had seen that rally. And then this was the phase, the golden phase, in which you had that massive rally, and then the market became extremely overbought. And now look at what's happening. We are once again back down to almost the pre-COVID level, or the COVID level short positions in the market. Now, these shorts have just increased as the market has declined. So it'll be interesting to see what happens. What do these shorts know? Or are they just believing that the market rally is over? There's another indicator. This is a Invesco QQQ ETF. This ETF is basically nothing, but it tracks inflows and outflows into the Nasdaq listed big tech companies. Over the last 15 days, the kind of short bets which have been taken, let's get back to the previous graphic. The short bets which have been taken on that is $5.4 billion, which has taken to the total short bet to $25 billion. This is the data courtesy of Wall Street Journal report. So that's the humongous data. The other point that I was looking at the global market, from the global market point of view, is what's happening in the bond market. And this graph is fascinating, because for the first time since 1980, the global bond market is in a bear market, which means that the drawdown from the top is 20%. Equities go through the bear market, right? But this is the first time that the bond markets have gone through a bear market. First time since 1980. What is the significance of 1980, by the way, guys? None of you were born, except me. So just tells you the enormity of the kind of bear market that we have in the bond markets. And one final data point. Now let's look at the Indian market as well. In the Indian market, let's first revisit this because what this means is that the Fed will increase rates by another 75 basis points. Now you ask me, why is that a problem? The market's been factoring in 75 basis point rate hike in the last 2 meetings as well. What difference does it make if we have another 75 basis point? Because we don't know if this is the last 75 basis point. I don't want to go into the 80s when the Fed rates peaked at 20%, but the fear factor is back. Now in India, the FIIs are now on the short side, 73% on the short side, the net shorts at 60,500 contracts, which is shorts minus longs. At the recent highs, FIIs were long by about 20,000 contracts. Now this is where the picture is really getting fascinating. Shorts normally help markets if the markets turn. But for the markets to turn, there has to be some kind of a catalyst. Now, where that catalyst is going to come from, I don't know, but the market is positioned on the short side after a really long time, which for me is fascinating.
Okay, it's fascinating. And that brings us to the next question, right? If the US market is going to underperform, say it's going into a recession, in any case, since Powell's speech, the US markets are down 7%. Do we benefit from that? I mean, is India going to decouple from the US markets, which I think it's playing out. I mean, India has been resilient so far. And by the way, Anuj, you trolled yourself. I mean, I was trolling you so far, but now you took over the baton and you're trolling yourself.
Because, I believe, you should laugh at yourself. I wasn't laughing at someone else. So
I wasn't born in 1980, but I do remember the interest rates from B school. We had read about Paul Volcker, also known as Tall Volcker, because he was extremely tall. And then there was this graphic which said that the interest rates are
the height of the Fed chairman.
The Fed chairman, yeah.
And Janet Yellen was the shortest, and the interest rates were near zero.
We've all seen
you
that
are a 90s kid, right?
Yeah. But I still know Tall Volcker.
Okay, but I mean, Prashant, that was the big narrative, right?
Yeah.
That could India get more flows, outsized flows over the rest of the year, purely because of how much pain there is across the US, across Europe and China?
I think it could. I mean, that's a short answer, but for the long answer, let me go across to the wall. And I'll tell you why this is such an important point to make at this point in time. Let me just, so this is the question, right? Could India, I mean, you could put a question mark here, not put a question mark, but India structurally higher FII allocation, is it possible? Right? Now, just a quick bit. This is what they've done recently, what FIIs have done recently. Between October 2021 and June 2022, they sold $33 billion. Now they've bought back $7 billion or so of that amount. All right, what is the big talk which is going on? This is it. And I put this in sort of quotation marks. India deserves higher FII allocation. This is the growing chatter, that foreign allocation to India should rise materially. Let's explore this argument which many people are making. To do this, let's just understand where India gets most of its foreign money, or rather what route does this money come in from. 96% of the foreign money which comes into India, 94% of the foreign money which comes into India comes not into India dedicated funds, but it comes in what are called emerging market funds, global emerging market funds, of which India is a part. India dedicated funds, active and passive, is only about 6%. The rest of the 94% comes through non-India dedicated active and passive funds, ETFs. So 94%. Now remember this number. How do these funds allocate to different markets? So, I mean, somebody in the US gives money to a global emerging market fund. They will invest money in various emerging markets according to benchmarks. MSCI emerging market is one such benchmark. India's weight right now is 12.7%. The big market, of course, is China at about 31.2%. So again, I'll come back to this table because this is also important. Why are FII flows suffering? Now, this is one argument which many have made, and we've explored this as well. Mind you, remember the fact that we are part of the emerging market basket. So when money comes into the emerging market fund, India gets its share. But what happens when money into emerging market dries up? And why has it dried up? Because of these reasons. Look at other constituents in terms of other countries. China is hurting because of zero COVID policy, crackdown on business, geopolitics. Taiwan, of course, is at the center of a battle between big powers. South Korea, which is another big market, I mean, it could actually move out of the emerging market index and go into the developed market index, could happen as early as 12 to 18 months. The Brazilian economic prospects have dropped sharply. They've taken a turn for the right. Saudi Arabia is arguably one stock market, Saudi Aramco, right? And there are ESG concerns, etc. And South Africa is perceived as a low opportunity market broadly. Russia, of course, is now out of the MSCI index, is uninvestable. These are the countries along which this is the space that India shares in the emerging market basket. So when people find opportunities in all these other emerging markets slow, they don't put money into emerging markets, and India also suffers because we get a portion of that according to the MSCI weightage. What are the other reasons why India is different? Let's look at the historical record. Let's just go back. The 10-year CAGR dollar returns for India is 7.8%. This is the figure. I mean, you know, South Africa, Brazil are negative, and look at the other returns. Look at growth forecasts for 2023. Top of the list, India is at about 7.27. The others are far behind. China at about 5.2 comes the closest. So both in terms of historical stock returns and future growth prospects, economic prospects, India is right up there. Hence this question, does India deserve structurally higher FII allocations? What I understand after speaking to foreign funds, etc., is big investment boards are capping their investments into China. So they want to limit, they want to cap it and not very big money. Some big asset allocators have started giving mandates for emerging markets ex-China, right? This is important. The big question though is, will China continue to sort of hurtle lower, and maybe we will know in October once, you know, whether President Xi gets his third term, he becomes president for life, those kind of things. Will they loosen up, become business friendly once again, zero COVID policy goes? We don't know. Those are all what ifs. The feedback is that a lot more money could come into India if not for very high valuations. People want to come into the market big time. So structurally higher FII allocation, all told, is possible, but it's a process. It's not a one-time shift. It's not that people stop allocating to every other emerging market and put money into India. This is, I mean, just imagining if China's weight goes to zero. This is not going to happen, but if there was a emerging market fund ex-China, what would the weights look like? I'm just going to focus on India. India's weight right now is 12.7, but if China goes to zero, India's weight goes straight up to 18.5%. So this is, I mean, a big what if, but I think, you know, as I said, structurally, I think we are on the right path in terms of higher FI allocations on a permanent structural basis and not a one-time thing. Back to you guys.
Okay, thanks a lot, Prashant, for that. So Prashant and Anuj went over to the wall, and where are you going?
I'm going to the mall because the other big story that we're tracking this time around on Monday, of course, you know, while we're talking about so many events that took place in the market, the volatility, etc., there was also the big Reliance AGM that happened. And the biggest takeaway for me from that AGM was Reliance finally entering officially into the FMCG space. And that's important primarily because one, you know, Reliance has already been selling a lot of the FMCG daily need products via its own brands. We had, you know, Thirsty Tail, we had something like Snack Tack, etc. But now it's also gone ahead and acquired Campa Cola, Socio. These are brands that y'all would know from the 70s and 80s, not you. But, you know, these are brands that they're planning to bring back into the fold of the consumers. Why this is important is because if in recent times any of y'all would have gone to Costco, y'all would have seen the ubiquity of Costco's own brand, which is Kirkland, in their stores. They're nearly 31% of their overall sales. That amounts to $60 billion. Reliance Retail does 2.2 lakh crore worth sales. Even if they do 3 to 5% of the overall retail sales from their own FMCG brand, that would mean 7,000 to 11,000 crore worth sales, and that would put Reliance's FMCG brand into the top 10 FMCG companies. And what if they do 10% of their sales from their FMCG brand? That would cross 20,000 crores, 22,000 crores to be precise, and that would make it the second biggest FMCG company in the country after HUL, which does 55,000 crores. So those are the kind of numbers that we're talking about at scale. My sense is that this would have happened primarily because you see the valuations at which FMCG companies trade, and Reliance Retail has always been the value driver or valuation driver for Reliance, and in that now they're trying to extract further value from the FMCG business, and which is why Mukesh Ambani also said that, you know, he's confident that you know, this will be the biggest piece in their overall group scheme of things.
You know, Campa Cola was once India's largest selling drink. This is when Morarji Desai shut shop on Coke. Coke was made to move out of India.
That's correct.
And that's when Campa Cola was India's #1 drink. And then came PV Narasimha Rao's liberalization policy, which really, I mean, perhaps was the turning point for India, right? The best Prime Minister India has ever had, you know, really opening up the economy with Manmohan Singh. Coke made a comeback.
I've got a Campa Cola bottle right on my desk. I can't go to get it.
Just one bit trivia.
Made me thirsty.
The brand Socio, which is very popular in Gujarat, was actually a government-owned organization, and they wanted to make the brand called Socio. And because it was Gujarat, they made it Socio, and it's doing really well.
Okay. Let's now talk about the big trends in the auto space.
Okay, so
Sonia.
Reliance is not in the auto space so far, but you never know, right? So since we're talking about the auto industry, I mean, this time there are 3 big trends that I'm spotting in autos for the month of August, in case you missed out on all the numbers. The first big trend is that commercial vehicle growth has slowed down quite a bit. It could be because the base effect has worn off. It could also be because in the monsoons, generally, people don't buy too many fresh vehicles. They buy pre-used, you know, there are pre-sale vehicles. But overall, if you look at it, it's a low single-digit growth. Tata Motors barely saw 6% growth. Eicher Motors was just a 4.4% growth. So that's the first big trend. The other big trend is that two-wheeler exports are under a lot of pressure, and that brings us back to that discussion about how India could benefit more from, you know, others, because there's a big slowdown underway across the globe. So look at it, Hero Motor exports down 50%, Bajaj Auto down 30%, and TVS was down almost 15%. And the last big trend is that there's a strong revival in the passenger vehicle segment, perhaps because of new launches, because of a big order backlog, as well as the supply side situation easing. Maruti went up almost 30%, M&M Auto sales were the best of the lot by a big margin, almost a 90% gain, and Tata Motors, because of the Tata Motors Nexon, did exceptionally well too. So that is the update as far as the auto space is concerned. But on that note, it's time for us to take a quick break on Editor's Roundtable. Don't go anywhere. We'll be back in just a bit.
Welcome back to Editors Roundtable. We have a guest joining us now. Harsha Upadhyay is CIO Equity at Kotak Mutual Fund. Harsha, good evening. Thanks a lot for joining us. What did you make of the kind of volatility, I would say the kind of violence that we had in the market, ending the week flat, but within that there were so many moves?
Good evening, Anuj. You are right. I think the volatility is here to stay. There are many macro headwinds, as we have discussed in the past, which are in front of everyone's eyes. So to that extent, I think every now and then you will see choppiness in the market. And also the fact that the latest up move that we saw in the market was entirely liquidity driven and based on valuation expansion rather than earnings upgrades. So to that extent, at every higher level, there will be some nervousness and some profit booking, I guess. So I think one should be ready for that kind of volatility even going ahead.
Harsha, the view from Kotak has been cautious for some time now, right? About almost one and a half months or so. With Nilesh with us, others as well. You've sounded cautious as well. Do you have a view that maybe markets need to settle slightly lower at an aggregate level?
Not exactly. I mean, if it goes down and it gives an opportunity to investors to enter at lower valuation levels, then it will be good. But I think even if it consolidates at around current levels for some more time, until we start seeing some kind of stability in earnings, that will be good for markets. Because if you look back and see where markets were in the month of June, it was around 15,000 to 15,500 Nifty. And at that point of time, the valuations were lower than fair range of valuations on a long-term basis. But with the sharp 15% up move that we have seen, which has not been supported by earnings upgrades, in fact, there has been a marginal downgrade during the June quarter earnings season. Given that valuations have actually moved again back over the fair range of valuation. So to that extent, I would say that a bit of consolidation would help the markets.
Harsha, good evening and thanks for joining in. So the domestic market has picked up in a big way, right? I mean, I just looked at the Ganpati celebrations this time around and the mammoth scale at which it happened. One just wonders how the festive season will pan out as we head into Diwali. People are just out there traveling, shopping. Do you think that this whole basket, whether it's autos, whether it's consumption, FMCG, you think you'll continue to see outsized gains for the rest of the year?
In terms of demand, we clearly believe that the festive season is going to be very, very strong across the board, whether it's discretionary, non-discretionary. But in terms of stock performance, we are more positive on autos, for example, where there has not been much of a performance for the last several years for various reasons. And now everything seems to be falling in place for that sector. And the ownership is also not as high as what we would have seen historically for the auto sector. Given all this and the fact that valuations are reasonable, we should see this sector outperforming. While consumer durables could also have very good demand coming in the festive season, but valuations are not as supportive as that would be for auto, for example. So to that extent, one has to look at it in a different way.
Right. Taking Sonia's point further, while people are celebrating, consuming a lot, etc., what they're not doing, Harsha, is going to the movies. Because I was just looking at some data. July box office collections were 270 crores, a paltry 270 crores. And in August, that number was half. Pre-pandemic, 40% of Bollywood movies were a success. And that number post-pandemic is just 7%. PVR Inox, while they've rallied from the lows, from the highs, they've corrected just around 15-20%. What are your thoughts on these stocks?
Mangalam, clearly, I think there has been a change in viewer behavior. I think people have preferred to watch it on devices, on OTT platforms, rather than actually going to the movie theaters. Maybe a little bit of still hesitation because COVID is still around and people are not comfortable going in crowded areas, etc. There could be multiple reasons. But clearly, I think the traditional theater business has taken a hit. We'll have to wait and watch whether it's a completely structural one or it's just a cyclical blip because of the COVID and other factors. Over the next few quarters, I think we'll see clear signs about one way or the other.
Okay. Now, Harsha, one thing which stands out is that despite the kind of volatility in the market and especially the global market, the mid-cap market is doing remarkably well. It's been quite resilient. Do you get a bit nervous looking at the way some of these stocks have started to move off late? Some of the B group stocks and maybe even lower quality stocks, the way they moved this week, does that make you nervous, or do you think it's par for the course?
Anuj, it always happens, right? Whenever markets start to move up, you will see some of the lower run stocks, whether in mid caps or in small caps, also tend to move up. All of them may not have fundamental backing, but they do move up quite significantly in those periods. So one has to be cautious, especially after seeing 15% kind of a sharp up move. One has to really focus on companies which have a reasonable strength in terms of earnings, in terms of going forward, how they will pan out. And where the valuations are. I think you can't really look at mid caps or small caps as a homogeneous basket and take those calls. You will have to look at each business, evaluate, and then make your portfolio. And that's what will help.
Okay, Harsha, we have run out of time, but thanks a lot for stopping by and speaking to us on this edition of Editors Roundtable. With that, it's a wrap. But you know what? I was just listening to Harsha saying that viewer behavior is changing. Yeah. Of course, I've been sitting at home. I haven't gone to a theatre, but there's a movie coming up next week, right? Brahmastra.
I'm excited for that.
I'm excited for that.
But that's next weekend. What about this weekend? This weekend, there's so much sporting action lined up.
Yeah.
You know, there's US Open going on. And on Sunday, I'm telling you, there's United versus Arsenal.
So, my husband has already told me on Sunday, there's nowhere we're going. Those 2-3 hours, we're going to be sitting right in front of the television. So, our Sunday's cut out.
Sonia keeps telling me about trolling and all, and how, at times we are mean to each other. The meanest thing I had done was I had gone to Sonia's home for a party wearing United shirt.
And he was allowed in, by the way.
He was allowed in. So that is as mean. Prashant, your thoughts?
Absolutely. My plan is to go visit Lal Bagh Cha Raja.
Same here. I think that's going to take the entire weekend because that's how long the lines are.
Wear your masks, guys. Wear your masks, all right? And enjoy the festivities, of course. And you folks, join us yet again Monday morning, bright and early. Until then, enjoy your weekend.